Let's pick up on the markets update now. This week's market developments have been described as uneventful, as investor activity has been largely cautious due to a key economic data from the United States, Europe and China. However, global stocks have since stabilized from a sell-off sparked by the hawkish stance expressed by the U.S. Federal Reserve recently for more interest rate hikes to come. Portfolio manager at FNB Wealth and Investments is Wayne McCurrie. He speaks to us now about what we can expect in today's trade, Wayne McCurrie, given the previous session's performance globally. Your thoughts?
Look, unfortunately, it's going to be a negative day today. And I think once again, unfortunately, this is going to continue for a little while. I mean, the market, quite frankly, in the little rally that we saw up until the Federal Reserve speech, I think the market was too optimistic, and now it's coming back to reality. Interest rates are going up, inflation is high, and global growth is slowing. So I think we're still going to see market weakness. However, maybe there's another, 10% left in downside. I don't see a huge bear market developing from this level. So basically going back to what we saw 2 years ago, 2 months ago, the bottom there.
Yeah. All right. Let's expand a little bit on the domestic front and perhaps focus the attention on the currency. The dollar has been strengthening against the rand, and that basically tells us that the rand is losing steam. Do you foresee that going on for some time?
Look, yes. This current situation of dollar strength is exactly that. It's nothing to do with the rand. It's not a reflection on South Africa. It's just that when you are in an uncertain global environment with increasing interest rates, everyone rushes to the safe haven of the dollar. Now, the rand fair value is still below 16. Now, whether it gets there this year or next year, I think we're going to have to wait for global growth to stabilize, and maybe in the second half of next year, interest rates being cut again worldwide before the rand goes back below 16. So it's going to sit somewhere around the 17 mark, I think, for another year. But I also don't foresee a collapse. I can't see it going to 18 or 19 against the dollar. The conditions are just not that negative for South Africa, for the simple reason is even though commodity prices are falling, we're not going to see a total collapse in commodity prices as we saw in 2015, which is the last time the rand truly collapsed for economic reasons and not for the COVID reasons.
Yeah.
So I think it's going to stay around about this level for a while.
Then we've seen South Africa's read surplus widening to 24.76 billion rand. How should we make sense of that?
Well, look, I mean, you must understand these numbers are very, very volatile on a monthly basis. You can't really read too much into it. But, I don't think we're going to face a balance of payments crisis at all at the moment. And the rand weakness, as I said earlier on, is just pure dollar strength. So I don't think there's anything untoward in that number that we've got to worry about.
All right, let's quickly touch on company news and sometimes interim financials. Your thoughts on that?
Look, even though their financials, earnings have halved, the market was expecting this. So the share price actually looks okay today. It's not up hugely, but it is certainly up in a down day. And you've got to understand these short-term insurers, every now and again, they hit a terrible occurrence. So we've had the floods in KZN. That's affected them quite dramatically. A couple of years ago we had the fire. But the nice thing about these short-term insurers is they can actually reprice their premiums quite quickly. So when you look at their financials, the actual premium income, the premiums that they've written, is up 23%, which is very encouraging. And of course, even though their earnings are down quite dramatically, they've actually upped their dividends only by a small amount, because they're absolutely cash flush and they've got plenty of reserves. So I don't think, even though earnings were down, This was not unexpected by the market. And as I said, in a down day, they've actually pushed the share price up about 2%.
Wayne McCurrie, we're going to have to leave it there. Thank you very much for that markets update.